Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Sunday, October 8th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we delve into a courtroom drama that's gripping the crypto community, the trial of Sam Bankman-Fried, co-founder of Alameda Research and FTX. Is he a criminal mastermind or just an entrepreneur caught in a regulatory web? We'll also explore a controversial new biography on SBF that's raising eyebrows and complicating narratives. But that's not all. Elon Musk is locking horns with the SEC, and his call for a complete regulatory overhaul could be a game changer for the crypto world. We've also got a deep dive into the BRICS alliance. Are their financial moves signaling the end of the US dollar's global dominance? On the regulatory front, we're looking at the Financial Conduct Authority's latest moves in the UK. One company got the green light, while another is scaling back. What does that mean for the future of crypto in the UK and beyond? Last but not least, Ethereum co-founder Vitalik Buterin is proposing a new staking system that could revolutionize Ethereum's decentralization efforts. Stick around as we break down these critical stories and analyze their potential impact on the world of crypto. Tonight, we're taking a look at the first week of the courtroom drama surrounding Sam Bankman-Fried, co-founder of Alameda Research and FTX. This is a case that has the crypto world on the edge of its seat, and for good reason. I have been considering how to cover this trial, and I think, barring major developments, I'm just going to summarize events every few days, rather than report on each and every detail of the proceedings. There's going to be plenty of that coverage, and I want to give other stories the room that they need to be heard. The U.S. Department of Justice is painting a grim picture of Bankman-Fried. They claim that he built his crypto empire on a foundation of lies and deceit. The prosecution's opening statement was a gut punch, calling FTX a house of cards built on a lie. 4 key witnesses have already testified, and their accounts are damning. Mark Julliard, a French trader and FTX investor, revealed how he lost nearly $100,000 when the exchange collapsed. Adam Yedidia, a former close friend and developer at FTX, disclosed that customer deposits were considered debts owed from Alameda to FTX, amounting to a staggering $8 billion liability. Matthew Huang, co-founder of venture capital firm Paradigm, invested $278 million in FTX and lost it all. Gary Wang, another co-founder, admitted to wire fraud, securities fraud, and commodities fraud. The defense is struggling, folks. Bankman-Fried's lawyers have been ineffective, focusing on what they call his good faith actions. But let's be real. A mistake in business, even a colossal one like misplacing $8 billion, is not just a simple mistake. It's a betrayal of trust, especially in a space that values decentralization and financial freedom. Bankman-Fried's empire did not just crumble, it imploded, affecting everyone from individual investors to venture capitalists. Special privileges were given to Alameda Research, allowing it to maintain a negative balance with FTX. This isn't just a failure, it's a clear manipulation of the system, and it puts every one of us at risk. The prosecution has also highlighted that the absence of clear crypto regulations is not relevant to this criminal suit, so the "we didn't know it was wrong" defense won't fly. Bankman-Fried even sued his insurance provider for failing to cover his mounting legal costs. The trial of Bankman-Fried is a watershed moment for the crypto industry. The prosecution is painting a picture of a man who built his empire on lies and deceit, while the defense is scrambling to portray him as a well-intentioned entrepreneur caught in a web of mistakes. The facts are damning. Witnesses have testified about the inability to withdraw funds, massive debts, and special privileges that put FTX customer funds at risk. This trial is a reflection of the crypto industry's darker corners. The prosecution's case is built on the premise that Bankman-Fried's actions were not just mistakes, but calculated moves to defraud investors and customers. The defense's lackluster performance so far only adds fuel to this narrative. The implications are far-reaching, but let's not forget, this is a man who was willing to gamble not just with his future, but the future of all those who trusted him. As we wrap up on the Sam Bankman-Fried trial, here's something to think about. If the courtroom is a theater of facts, books can be a theater of perception. Our next segment will explore how one writer's view could be coloring the narrative. If you're curious about how narrative can affect perception, smash that like button and let me know in the comments. Michael Lewis recently released a biography on Sam Bankman-Fried. The book, Going Infinite, stirred the pot, and not in a good way. Lewis's portrayal of SBF is sympathetic. He paints him as a chaotic agent, not a criminal. He even suggests that Sam's shortcomings are due to neurodiversity and sleep disorders. But let's not forget that Sam is tied to the disappearance of billions and a growing disdain from regulators. Lewis's book came out on the first day of SBF's trial. He described it as a, quote, letter to the jury. I gotta say, that's pretty good timing. The book also muddies the line between FTX and its sister company, Alameda Research. Lewis mentions a document that shows over $10 billion meant for FTX that ended up in Sam's private trading fund. Yet he seems to give SBF a pass, attributing it to his chaotic management style. Now, let's talk about the real issue here. Lewis's book is a disservice to the crypto community. It confuses the mainstream audience by conflating FTX with the broader crypto space. He even fails to distinguish between centralized finance and decentralized finance, a crucial point that lawmakers worldwide are now acknowledging. Lewis's portrayal of SBF is not just sympathetic, it's misleading. The irony is palpable. Lewis, an institutional man, is advancing the narrative that crypto needs adult supervision, the same narrative that SBF once championed in Washington. Lewis's book serves both as an apology for SBF and a call for regulation, a double-edged sword that could harm the industry that we all care so much about. Now, don't let this book fool you. And to those new to crypto, do your own research. Don't let a single narrative shape your view of an entire industry, because trusting the wrong narrative can cost you, and not just in dollars. From biographies to battle cries, we're pivoting from one billionaire's plight to another's warpath. Elon Musk is taking on the SEC, and that could be the dawn of a new regulatory era for crypto. Don't go anywhere. Hit subscribe and ring that bell so you don't miss any crucial updates. And as I'm sure you can tell, this is our cover for tonight. Elon Musk has thrown down the gauntlet at the US Securities Exchange Commission. And this isn't about a billionaire's tantrum. It's a call for a comprehensive overhaul of regulatory agencies, including the SEC. Musk's words resonate with anyone who's had enough of regulatory overreach, especially in the crypto space. So what's the beef between Musk and the SEC this time? The agency sued him over his acquisition over social media platform Twitter, now rebranded as X. Musk was supposed to testify about this acquisition, but he didn't show. In response, Musk took to X, stating that a complete revamp of agencies like the SEC is sorely needed. He even called for a commission to punish those who misuse their regulatory power for personal and political gains. When asked if this overhaul would ever happen, Musk did not hesitate. He pegged the probability at a solid 100%. That's right, Musk is confident that the SEC and similar agencies are due for a reckoning. Now, why should the crypto community care? The SEC's been a thorn in the side of crypto enterprises. Coinbase and Binance were both sued by the SEC in June. Ripple's been fighting an SEC lawsuit since December 2020. Even Grayscale had to drag the SEC to court over its Bitcoin ETF application. So when Musk, a figure admired in the crypto world, takes a stand against the SEC, it's kind of a big deal. But it's not just Musk who's fed up. Lawmakers like Congressman Warren Davidson have proposed bills to reform the SEC. Even within the SEC, Commissioners Hester Pierce and Mark Yeda have often disagreed with the agency's crypto decisions. So what does this mean for the future? If Musk's prediction holds true, we could see a seismic shift in how regulatory agencies operate. This could be a game changer, not just for social media moguls, but for the entire crypto industry. And let's be real, any move to decentralize power and hold regulators accountable is a win for financial freedom. Musk's call for an overhaul isn't just a personal vendetta. It's a call to action for anyone who values financial freedom and is skeptical of centralized power. So keep an eye on this story, because if Musk is right, the SEC's in for a world of change, and that could be a monumental shift in the balance of power. Elon Musk and the SEC are fighting over control. Meanwhile, another power struggle is unfolding on the global stage. The BRICS nations are challenging the dollar, and the stakes couldn't be higher. The BRICS alliance is making moves that could seriously challenge the US dollar's hegemony. Let's start with the sanctions. The US slapped economic sanctions on Russia in February 2022. This was in response to its invasion of Ukraine. Iran, a new BRICS member, also faced sanctions for supporting global terrorism. These sanctions crippled their economies, forcing them to rely on other developing nations and to use local currencies for trade. U.S. Treasury Secretary Janet Yellen admitted that these sanctions led BRICS to challenge the dollar. Talk about a backfire. So here's where it gets interesting. Because despite these sanctions, BRICS nations are already challenging the US dollar. They're convincing developing countries in Africa, Asia, and South America to ditch the dollar in favor of local currencies. If sanctions are lifted, this bloc could exert even more pressure on the dollar. Now let's talk oil. Russia's third largest oil exporter, Gazprom Neft, announced that it's cutting ties with the US dollar. They will accept local currencies like the Chinese yuan and Russian ruble. This move follows similar actions by India and the UAE, who've started settling oil trades in the rupee. Even Saudi Arabia is open to accepting local currencies for oil exports. So what does this mean for the US? If countries reduce their dependency on the dollar, the US economy will be the first to tank. Heritage Foundation economist E.J. Antoni warned that the US could reach hyperinflation. Losing reserve currency status would mean 70 years of deficits would come flooding back to the US, leading to skyrocketing commodity prices. US sanctions against BRICS nations have not only failed to cripple their economies, but have also triggered a counter-movement that could seriously undermine the US dollar. It's a classic case of unintended consequences. The US was right. It could corner Russia and Iran. But as a result, it's pushing them and other BRICS nations to create a new financial order, one that doesn't rely on the US dollar. This move by Gazprom Neft to ditch the dollar is a significant milestone in this financial revolt. It's a signal to the world that the dollar's dominance in global trade, especially in the critical oil sector, is waning. If more companies follow suit, the US will find it increasingly difficult to fund its deficit, and the dollar could lose its status as the world's reserve currency. What's even more alarming is that warning from The Economist about the potential for hyperinflation in the US. Imagine a scenario where the US can no longer export its inflation. Prices of commodities would skyrocket, and the US economy could face severe turbulence. This is a looming financial storm that could shake the very foundations of the US economy. So while the US government continues to wield its sanctions hammer, it seems to be hitting its own thumb more than nailing its intended target. The BRICS nations are not only surviving these sanctions, they're laying out the groundwork for a new financial landscape, one that could see the US dollar relegated to a secondary role. Challenging the dollar is a global game, but let's zoom in on the UK. The Financial Conduct Authority is playing a game of its own, deciding who's in and who's out in the crypto space. Keep listening to find out more. Like this episode if you appreciate these trips into the regulatory weeds. Let's take a look at the Financial Conduct Authority's latest moves in the UK and how they're shaking up the crypto space. Two companies, Komeinu and Nexo, find themselves at opposite ends of the FCA's regulatory spectrum. First up, Komeinu. The Nomura-backed crypto platform just got the FCA's nod to operate as a custodian wallet provider in the UK. This is not just a minor win. It's a significant foothold in a market that's both lucrative and tightly regulated. Komeinu can now offer crypto custody services, including collateral management, through its platform Komeinu Connect. CEO Nicholas Bertrand sees this as a key regulatory milestone, and frankly, so should you. Komeinu isn't just stopping at the UK, it's got approvals in Italy and Dubai. It's a global game, and they're playing to win. Now, let's flip the coin. Nexo is pulling back its services in the UK. Why? The FCA's new rules. Effective today, October 8th, Nexo will phase out cash-back payouts and terminate referral programs. This is a seismic shift forced by the FCA's stringent promotion rules. Companies now need to register for self-approval of ads and give first-time buyers a 24-hour window to rethink their investments. Nexo joins PayPal and Bybit in scaling back UK services. It's not an exit, but it is a significant retreat. If we're being honest, the FCA's recent moves are both good and bad for the crypto industry. On one hand, Komeinu's FCA approval is a significant milestone. It not only legitimizes the company, it also opens doors for other crypto custody services in the UK. This could be a sign that the FCA is warming up to certain aspects of the crypto industry, particularly around custody and asset management. On the flip side, Nexo's decision to halt certain services in the UK is a reminder of the regulatory hurdles crypto companies face. The FCA's stringent rules are forcing companies to either adapt or exit, as seen with Nexo, PayPal, and Bybit. This raises questions about the FCA's overall stance on crypto. Is the regulatory body selectively opening doors for some people while closing doors in the faces of others? The diverging paths of these two companies in the UK market are indicative of a larger trend. Regulatory bodies are becoming more nuanced in their approach to crypto, picking and choosing what they find acceptable. This selective regulation could lead to a fragmented market where only certain types of crypto services can operate freely. This isn't just about the UK, this is global. Regulatory bodies are stepping in, and you can just bet they're taking notes from the FCA. We've talked about who's in and who's out in the UK crypto scene. Now, what about the tech behind it all? If you're excited about Ethereum's potential, leave a comment with your thoughts. Vitalik Buterin put forth a proposal that could reshape the staking landscape of the world's second largest blockchain. Buterin's proposal aims to tackle the elephant in the room: centralization. The current staking system has limitations that could lead to centralization, particularly in the selection process for node operators. Buterin's not just identifying the problem, he's offering a solution. He suggests a two-tiered staking system inspired by models like Rocket Pool and Lido. In this new structure, we would see two key players: node operators and delegators. Node operators would function as validators, running nodes to create new blocks. They'd commit a specific amount of Ethereum to the staking pool. Delegators would become pool members, staking their assets with their chosen node operators. This gives delegators the autonomy to select their preferred node operators. It's a win-win for both parties and a defense against centralization. But it's not just about decentralization. Buterin's proposal also promises to bolster security. How? By enabling delegators to determine node operators. Anyone seeking to become a node operator without delegator support would need to commit a significant portion of their Ethereum, possibly up to 1/3 of the total staking. That's more than 2 million Ethereum. Any hacking attempt would be a massive financial risk for the attacker. The proposal also addresses efficiency. The current Layer 1 consensus mechanism can only process between 100,000 to 1 million BLS signatures per slot. Buterin's model would significantly reduce the number of required signatures from 800,000 to 10,000. Buterin's vision for Ethereum's future is clear. By decentralizing the staking process further and integrating safety nets, he aims to empower those lacking resources for solo staking. He wants to reduce the transaction processing load on Ethereum's consensus layer, making it easier for all to run a validating node. So what's the takeaway? Buterin's proposal isn't just a patch. It's a vision for a more balanced, decentralized, and high-functioning Ethereum network. It's a step toward empowering the individual and sidelining the potential for centralized control. So what happened? In the trial surrounding Sam Bankman-Fried, the prosecution is painting a grim picture, charging him with fraud and deceit. With 4 damning witnesses, it's not looking good for the defense. Michael Lewis's biography on SBF, Going Infinite, provides a sympathetic view. It muddles the lines between FTX and Alameda Research, potentially doing more harm than good for the crypto industry. Elon Musk challenges the SEC and calls for an overhaul of regulatory agencies. This feud could have significant implications for crypto regulations, especially if Musk's prediction of an impending reckoning holds true. The BRICS nations are moving away from the US dollar, potentially undermining its status as the world's reserve currency. This could lead to hyperinflation in the US and impact the global financial landscape. The Financial Conduct Authority in the UK is tightening its grip on crypto companies. While Kameno got the green light to operate, Nexo is pulling back its services due to stringent new rules. Finally, Vitalik Buterin proposed a new staking system for Ethereum, aiming to tackle issues of centralization and inefficiency, thus shaping the future of the Ethereum network. Tonight's episode has been a tour through the legal, ethical, and regulatory landscapes shaping the crypto world. We've seen how figures like Sam Bankman-Fried and Elon Musk can become lightning rods for broader issues, both good and bad. Biographies and legal battles aren't just about the individuals involved, they are reflective of the shifting attitudes towards regulation and governance within the crypto space. The actions of regulatory agencies, both in the US and abroad, are causing companies to adapt, retreat, or charge ahead, further redefining the boundaries of what's possible in the decentralized frontier. The BRICS nations' challenge to the US dollar and Vitalik Buterin's new proposal for Ethereum staking both show the tectonic plates of global finance are shifting, and the crypto industry is right at the epicenter. Crypto is at a crucial juncture. The decisions being made now could either pave the way for a more transparent and robust ecosystem, or create barriers that stifle innovation and limit financial freedom. What's certain is that the industry is becoming increasingly complex and entangled with traditional systems, for better or worse. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.